Imagine opening your bank app and realizing you picked the wrong checking account, and it has been quietly draining your money for months. Now, imagine choosing the right account instead, one that saves you money, earns you rewards, and makes your financial life smoother every single day. Most beginners never figure this out, but today you will. And there is one specific type of checking account that might fit your life better than all the others, but I am not revealing which one until we break down each option. By the end of this video, you will know exactly which account is right for you and why it can change your entire financial routine. Here is the real problem. Most people choose their checking account the same way they pick a fast food meal. They grab whatever looks familiar, whatever their parents used, or whatever the bank clerk pushes at them. But the truth is that checking accounts are not all the same. Some protect your money better, some help you save, some charge annoying fees, and some accounts are perfect for beginners if you understand how they work. By the time we are done, you will know how to match the right account to your real life, not someone else's. Number 1. Basic checking account explained. A basic checking account is the simplest and most straightforward option for beginners. It's the standard account you see at almost every bank. You deposit money, you withdraw money, you pay bills, you get a debit card, and that's pretty much it. But here's what makes basic checking both safe and dangerous for beginners. A basic checking account usually comes with monthly maintenance fees unless you meet certain requirements, such as keeping a minimum balance or setting up direct deposit. For example, a bank might charge $12 per month unless you keep at least $500 in the account, or have one direct deposit equal to at least $300. That may not sound like much, but over a year, that's $144 gone for no reason. The good news is, many banks waive the fee for students, beginners, or anyone who signs up for online statements. For example, a student checking account might be completely free until you graduate. This makes basic checking a great entry point if you pick the right version.
But here is what beginners often miss. A basic checking account rarely gives you rewards or interest. It is not designed to help you build wealth. It is designed to help you spend money conveniently. If you only need somewhere to store your paycheck and pay bills, a basic checking account works. But if you want your money to grow or work harder, keep watching. Example: Jessica, a college freshman, opened a basic student checking account just to pay rent and groceries. She never paid a fee because the bank waived it for students. For her, the simplicity made sense. But when she graduated and forgot to switch accounts, she started getting charged monthly without realizing it. This happens to millions of people every year. Number 2. Interest-bearing checking accounts. An interest checking account pays you a small amount of interest on the money you keep in your account. Think of it like a tiny savings booster. It is not designed to make you rich, but it does reward you for keeping money in your checking account instead of letting it sit idle. Most interest checking accounts require a higher minimum balance. For example, a bank might require you to keep at least $1,000 or even $5,000 to earn interest. If your balance drops below that amount, you might lose the interest for that month or get charged a fee. The advantage is simple. Your money earns while you wait. Even if the interest rate is only 0.10% or 0.25%, it adds up over time. Example: Daniel is a remote worker who always keeps around $3,000 in his checking account for monthly expenses. Instead of letting that money earn nothing, he moved it to an interest checking account. He earned a small amount each month automatically without doing anything extra. The downside is that beginners with low balances might not benefit. If you are still building your emergency fund or rarely keep more than a few $100s in your account, this type may not be the best fit yet. But it is worth knowing because later in this video, one specific account type actually solves that problem. Number 3, premium checking accounts. A premium checking account is like having a VIP seat at the bank. You get extra perks, such as higher interest rates, free checks, waived ATM fees, dedicated customer support, and sometimes even discounts on loans or safe deposit boxes. These perks make premium accounts feel luxurious, but there is a catch. Premium checking accounts usually require a very high minimum balance. Some banks ask for $10,000, $25,000, or even more across all your accounts combined. If you drop below the limit, you may pay a large monthly fee. Example: Michael runs a small consulting business and keeps large balances in his bank because cash flow matters to him. A premium checking account gives him free wire transfers, priority support, and ATM fee refunds. For him, the perks save more money than the monthly fee would ever cost. For beginners, premium checking accounts rarely make sense unless you already have high savings or transfer large amounts of money every month. The value is real, but the cost is high. Number 4. Reward checking accounts. Reward checking accounts are one of the most exciting types because they pay you for everyday spending. Think of them like debit card versions of credit card rewards. You can earn cash back, points, or discounts just by using your debit card or meeting certain requirements. But banks do not give away rewards for free. To qualify each month, you usually need to meet conditions, such as making 10 debit purchases, enrolling in online statements, or receiving one direct deposit. Sarah chose a reward checking account that gives her 2% cash back on grocery purchases when she makes at least 10 debit card transactions per month. Since she buys groceries weekly and uses her card for small purchases anyway, she earns money without changing her routine. This type of account works best for people who already use their debit card frequently. If you use cash or credit cards most of the time, you might not earn enough rewards to make it worth it. Number 5. Online checking accounts. Online checking accounts have become extremely popular because they often offer lower fees and higher interest rates than traditional banks. The reason is simple. Online banks do not pay for physical branches, so they pass the savings on to you.
Most online checking accounts have no monthly fees, no minimum balance requirements, and nationwide ATM access through partner networks. They are perfect for beginners who want convenience and low cost. Example: Emily works from home and rarely visits a physical bank. She opened an online checking account with zero fees and earns a small amount of interest every month. She deposits checks using her phone and transfers money instantly between accounts. But here is the potential issue. If you like in-person service or need cash deposits often, an online checking account might feel limiting. Some online banks allow cash deposits at partner retailers, but not all do. Still, for many beginners, this is the cheapest and easiest checking option available. Number 6. Second chance checking accounts. A second chance checking account is designed for people who had banking problems in the past. Maybe you overdrew an account. Maybe a bank closed your account because of unpaid fees. Maybe you were rejected when applying for a basic checking account. Second chance checking gives you another opportunity to re-enter the banking system. These accounts often have higher fees or fewer features, but after several months of responsible banking, you may be allowed to upgrade to a regular account. Example: Kevin had an old checking account closed due to repeated overdrafts. When he applied for a new account, most banks rejected him. A second chance checking account allowed him to rebuild his record. After 1 year, his bank upgraded him to a normal checking account with no fees. If you had challenges before, this type gives you hope and a path back to financial stability. Number 7. Student checking accounts. Student checking accounts are specifically designed for high school and college students. They usually have no monthly fees, no minimum balance, and easy mobile banking features. Many student accounts also come with overdraft forgiveness, meaning if you accidentally overdraft once or twice, they waive the fee. This protects beginners who are still learning how to manage money. Example: Olivia, a new college student, opened a student checking account that allowed her to make one overdraft mistake per semester without a penalty. This gave her confidence while she learned how to budget.
Student accounts are temporary, though. Once you graduate, your account will convert to a regular one. At that moment, check the new fees and consider switching to a different type if needed. Number 8. Joint checking accounts. A joint checking account is shared by two people. Both have access to the money. Both can deposit or withdraw funds, and both are responsible for managing the account. This type is common for couples, roommates, or family members. It is designed for shared expenses, such as rent, groceries, or bills. Example, a married couple might use a joint account to pay rent, utilities, and groceries. Each person contributes money and both can track spending in one place. This keeps their financial life organized and transparent. But joint accounts require trust. If one person mismanages money or overspends, it affects both people. Always communicate clearly before opening one. Number 9. Cash-back checking accounts. Cash-back checking accounts give you real money back for certain purchases. They work like reward checking accounts, but are simpler. You might earn 1% or even 2% back on categories like groceries, gas, or restaurants. Some banks offer $5 or $10 rewards each month if you meet specific requirements. This is one of the few checking account types where beginners can actually earn money from everyday habits. Example, Jamie earns 2% cash back on gas purchases. Since he drives to work every day, he earns small rewards every week without doing anything extra. This type is great if you do not like credit cards but want to earn something for your spending. Number 10. High-yield checking accounts. A high-yield checking account offers much higher interest rates than normal. Some offer rates as high as 2% or even 4%, but only if you complete certain tasks. For example, a bank might require 15 debit card purchases, 1 direct deposit, and online banking each month to qualify. If you meet the requirements, you earn a high interest rate on a limited balance, such as the first $10,000 in your account. Example, Laura keeps $8,000 in her high-yield checking account and completes the monthly requirements. She earns more interest in her checking account than she ever did in her savings account at her old bank.
These accounts are amazing if you consistently meet the requirements. If not, you get the normal interest rate, which is usually very low. Number 11. Mobile-first checking accounts. A mobile-first checking account is designed for people who do almost everything on their phone. These accounts function almost entirely through an app, giving you instant notifications, spending categories, easy transfers, and budgeting tools built into the platform. Many mobile-first accounts also offer early direct deposit, which lets you receive your paycheck up to 2 days sooner. For beginners who are managing tight budgets, early access can make a huge difference. Example, Alex works at a retail store and sometimes struggles between paychecks. His mobile-first checking account gives him early access to his direct deposit, helping him pay bills on time without late fees. The app also categorizes his spending so he can track where his money goes every week. Mobile-first checking accounts are ideal for anyone who prefers speed, convenience, and simple digital tools rather than visiting a physical branch. Number 12. No-fee checking accounts. No-fee checking accounts are becoming more popular as people get frustrated with traditional banking costs. These accounts remove almost all common charges, including monthly maintenance fees, overdraft fees, and ATM fees through partner networks. For beginners, no-fee checking accounts reduce financial stress and eliminate hidden surprises. You do not need to maintain a minimum balance or meet strict requirements just to avoid being charged. Example, Madison switched from her old bank because she was tired of losing $15 per month in fees. Her new no-fee checking account costs $0 to maintain and allows free ATM withdrawals at thousands of locations. She now uses the extra savings to slowly build her emergency fund. This account type is great for anyone who prefers speed, convenience, and simple digital tools rather than visiting a physical branch. Number 13. Teen checking accounts. Teen checking accounts are perfect for young people who are learning about money for the first time. These accounts require a parent or guardian to co-manage the account, allowing teens to spend, save, and track money safely.
Most teen checking accounts have no monthly fees, debit card controls, and spending limits that parents can adjust at any time. They often include built-in financial education tools to help teens learn responsibility. Example, Chris is 16 and just got his first part-time job earning $15 per hour. His teen checking account lets him deposit his paychecks, while his mom receives instant notifications when he spends. This helps him learn real-world money skills while staying protected. Teen accounts build powerful habits early and prepare young people for adult financial life. Number 14. Hybrid checking accounts. A hybrid checking account blends the features of a checking account and a savings account into one. You get everyday spending tools like a debit card, plus higher interest similar to what you would find in a savings account. These accounts are especially appealing to beginners who want to keep everything simple and in one place. Instead of juggling multiple accounts, a hybrid account helps you grow your money while still staying accessible. Example: Priya uses a hybrid account that pays a much higher interest rate than her old checking account. She keeps her bill money and spending money in one section and her savings goals in another, all inside the same account. It reduces stress and keeps her financial life organized. Hybrid accounts remove the gap between saving and spending, making them beginner-friendly and time-efficient. Number 15. Employer-sponsored checking accounts. Some employers partner with banks or credit unions to offer special checking accounts for their workers. These accounts often come with perks like no monthly fees, faster direct deposits, loan discounts, or overdraft protection. Example: a large hospital system partnered with a credit union to offer its workers free checking accounts with no minimum balance. Nurses and staff members receive their pay a day earlier than normal and get free financial counseling. This type of account helps employees reduce stress and build financial stability. Employer-sponsored checking accounts are often overlooked, but they can provide special benefits that you cannot get anywhere else. Number 16. Military checking accounts.
Military checking accounts are designed for active duty service members, veterans, and their families. These accounts often provide no monthly fees, early pay access, waived ATM fees worldwide, and strong customer support for families who move frequently. Jordan, an active duty member stationed overseas, uses a military checking account that refunds all ATM fees, even in other countries. This allows him and his family to access cash easily wherever they are stationed. It reduces financial friction during transitions and deployments. If you or a family member has served, a military checking account can offer more flexibility and fewer fees than many traditional options. Number 17. Credit union checking accounts. Credit unions offer checking accounts that often have lower fees and better interest rates than typical banks. Because credit unions are member-owned, their goal is not to make profit for shareholders, but to serve their members. Many beginners prefer credit unions because they offer friendly customer service, community focus, and more forgiving policies. Example: Rebecca switched to a credit union checking account because her local bank kept charging her overdraft fees. Her new credit union not only waived her initial overdraft, but also offered free financial coaching to help her avoid future mistakes. This personal attention helped her build confidence quickly. Credit unions are a smart choice if you want low fees and community-centered support. Number 18. Senior checking accounts. Senior checking accounts are created specifically for individuals aged 50 or older. These accounts often include free checks, no monthly fees, fraud protection, and easier access to customer support. Example: Frank is 61 and likes writing physical checks for his bills. His senior checking account gives him unlimited free checks and no annual fees. He also gets priority service when he calls his bank, which helps him solve problems faster. Senior checking accounts help older adults manage their money comfortably and safely. Number 19. Eco-friendly checking accounts. Eco-friendly checking accounts support environmental causes. For example, some banks plant a tree for every certain number of debit transactions, while others donate a portion of their profits to environmental programs.
These accounts also often reduce paper use by encouraging digital statements and online banking. Example: Mia cares deeply about sustainability. She chose an eco-friendly checking account where the bank plants one tree for every $100 spent using her debit card. Over time, she contributes to reforestation simply by buying groceries and gas. Eco-friendly checking accounts appeal to beginners who want their financial choices to align with their values. Number 20. High-security checking accounts. High-security checking accounts are designed for people who want enhanced protection for their money. These accounts come with identity monitoring, advanced fraud detection, real-time alerts, and sometimes even insurance that protects against cyber theft. Example: Lionel runs a small side business and receives many online payments. His high-security checking account instantly notifies him of unusual activity and automatically locks his card if something suspicious occurs. It helps him stay protected without constantly worrying. If you want peace of mind and strong digital safeguards, this type of account is worth considering. Now you know even more checking account types that can reshape how you manage your financial life. But here is the deeper truth. Choosing the right account is not about chasing every feature. It is about understanding your habits, your goals, and the way you want your money to support your life. When you match the right account to your daily routine, everything becomes easier. Your fees go down, your savings grow faster, your financial stress drops, and your confidence rises. So tell me this, which checking account type do you feel drawn to now, and what made it stand out to you?